Now, on the side of where I help my clients and set it up, one of the things that we do is, people say, well, this is self-directed, so who gets to choose these investments? We're not choosing them for the client. Self-directed means self-directed. They get to choose it. So some things that come up with me as well is clients may come in and they say, I have no idea who to lend to and who I might trust. And many times they want to know who our clients are investing with, who I'm working with. And of course we want to make sure people understand that all investments have risk. We don't guarantee income. They need to be talking to that investor and getting a feeling themselves as to whether they want to work with that person and they feel comfortable with how you mitigate risk. So I always encourage people to sit down with investors. What I can do is I can give people a list of investors. I, of course, do not make an offering or steer them in any particular direction. I have to give a number of people, in other words, instead of one. But they can then go and sit down with those people, talk to them, ask specific questions about how, the risk level. And then again, it's, just like even in the stock market, there are some people that, depending on your age, maybe you want something a little more risky, and as you get closer to retirement, you want less risk. And how you diversify your portfolio, you still want to bring in trusted advisors. If you have a lawyer, if you have a financial planner, a CPA, I can work with those people as well. That's what's unique about what we do. We're a hybrid company. So because we're not holding the money, we have, being an administrator, we have a lot more leeway to work with the client, and we can work with their trusted advisor, so it's unique. So I find that comforting to people. They want to know in this type of economy that somebody's watching their back, holding their hand, walking them through processes. Not to say that I don't have people come in who know exactly what they want to do, but down the road they may want to do something different. They may say, well, I did this, and now I want to do something different. And they may ask me, who do you know who does tax liens? Who do you know who's looking for private money? And again, I can give them a menu of possibilities, and that makes a big difference for clients as well.
Yeah, and for the individual investor, the beauty is that you provide a very robust infrastructure where all these transactions can be implemented. And so the investor has the advantage of being in total charge, exactly as you were saying, in choosing what to do and the investment that they want to participate in. And we can work together, very effective working situations where we provide our technical capabilities and management and implementation capabilities to help the investor in doing these transactions and enjoying the benefits. And again, it is up to the investor themselves. They can be as involved or as hands-off as they like.
Right. And there are some people that are very busy. They have full-time jobs, or they may decide not to. Maybe they are real estate investors, but they decide they don't want to put their IRA into their own investments, which they could, but they may have decided that they want to put it into with someone else and not have to be watching it as close. Well, I mean, they're going to watch it, but that it's not tied up, and they don't have to be worried so much about rules and regulations of how they use it. There's two different types of investors: ones that are passive, ones that are very proactive, and then there's even some that are right in between. So it sounds like you can work with a lot of different types of investors.
Absolutely.
Yeah.
And in fact, we enjoy working with different people. There is no ready-made plan or recipe that we want to impose on anybody. Investors can also decide locations, by the way, not just the vehicle, but the location. We are based in the Washington, D.C. metro area, but we work basically on a nationwide range because we are connected with other organizations that are sisters to us. And so we can really accommodate a broad range of demands and requests.
Oh, that's great. So you could have a menu of possibilities for them too.
Absolutely.
And they can look at each one and say, which ones they feel comfortable with or they like better than another.
Yeah. This is why we always encourage people to get in contact with us. In fact, On the website, there are how to connect with either one of us, either by
Right.
phone or email or whichever way. But it is important that we have direct discussions so that we understand what the plans are, what the desires are, and we can offer a plan that suits that desire.
That sounds great.
This is an extremely powerful combination. Very, very strong investment in a tax deferred or tax-free environment. You can't ask much better than this.
No, because your personal money is taxable. And one of the things I do see some of my clients doing is partnering with themselves. And you can do this because of the structure we set up. And the IRA LLC has a court precedence, a case called Swanson versus Commissioner, that allows for this type of partnering. So they're basically two separate bags of money, and when they have a contract, they have two signature blocks, one for their personal money, one for the IRA LLC. So when they invest that way and the profit comes back, it's split based on the percentages that went down. So there's a way for people to make some personal income on the same investment. Of course, that's taxable. And then the other portion goes back into their IRA. So many times people ask me, well, can I take the money and take it and use it personally? If it's on the IRA investment side, it does need to go back into the IRA. If you are under 59 and a half, and you can decide to take it out, but you may pay penalties and taxes. And if you're over 59 and a half, you decide to take it out, you may only pay taxes. And of course, the Roth, you would never pay taxes on it at all, especially after 59 and a half. So, you want to make sure, and that's what we're for, is to help people structure that properly and find out what their strategy is towards retirement. Do they need to use the money now? Do they need to take it out at 59 and a half? Can they leave it till 70 and a half? Do they want to partner with personal money? Do they want to partner with somebody else in their family? Because there's certain ways of doing that right, and there's ways to do it wrong. And we can help them do all of that and make sure it's done properly.
This is once again very powerful. We thank you, Sachi, for describing this briefly. Obviously, there is a lot more that needs to be planned and looked at when we implement this thing. So we invite you, as usual, to get in touch with us. Thank you very much.